next stock analysis review, this time BigBear.ai. We're talking AI and we're talking data and we're talking money and we're talking innovation. We like this sector. Are you ready? Are things about to go up or are they about to crash? Or could you be buying something better? Well, Jim Cramer thinks so. Let's see what he thinks on this one. Here we go.
Is BBAI.
Yeah.
Okay, I'm going to deviate. I'm going to suggest a stock that I think is better, that has more hype to it, that has more pizzazz, that everybody loves. I'm going to suggest Palantir, also known as Palantir by people who don't know it. And I happen to think that Alex Clark will come out and will say something really...
Jim Cramer prefers Palantir. That tells you the sector we are in with this stock, all right? Let's get into it. In this review, we are going to show you the intrinsic value. We're going to show you who owns it, how much it's really worth. This is the balance sheet. We're going to show you inside trading, the debt position. I'm also going to show you, give you a little glimpse at the website, what we might learn from that, the latest news. Our AI model, we run it through our software for you. We've got the latest trends, how it compares if you backtest it against the S&P 500. Always a very, very good idea. So are you ready for our full deep dive analysis on Big Bear? If so, welcome, buckle up, and welcome to the show. This is a members only event. And we were doing a big XRP thing today. I'll show you what was going on. Look at this. A huge rally today. People got scared, dumped it. A lot of people got liquidated and they used margin and it came straight back down and it's going straight back up again. So a lot of you over leveraged. You can see it quite clearly. And now it's going straight back up without you. So be careful if you leverage using on any single stock. You should never do that, particularly crypto, no matter how good it is. So, BigBear.ai, we're going to start nice and simple and we'll get deeper and deeper into the analysis as we go. So, are you ready for it? This is a members only event. Let's get straight into it. If you haven't tapped the like button yet, please do. This will come out as its own video later, and consider subscribing as well if you'd like to, and join us on our road to 100,000 subscribers. And we're going to be there quicker than you think, and everyone who's a subscriber is going to be in for a special party. Look at this. Let me show you how it's moving now. It's moving big time. 89,000. We were 87 just 2 days ago. Look at it rolling around now. 89, 148, 149. It keeps on going. Could be at 90,000 in minutes, and then we count down to 100,000. So without further ado, let's get straight into our review today. We're going to start simple, and then we'll get into more depth as we go. Straight away, you can see it's only been around for a short while. It IPO'd back here in 21, so only a few years, and it's been very, very volatile. It didn't do much on IPO day. It crashed down shortly after, popped up, and then sold off, and now people trade this in and out. Never good sign for a stock at all. That isn't. But anyway, let's have a look and tell you what BigBear.ai is. It engages in data-driven decision dominance and advanced analytics that provide its customers with a competitive advantage in a world driven by data that is growing in terms of volume, variety, and velocity. The firm operationalizes artificial intelligence and machine learning at scale through its end-to-end data analytics platform. It deploys its observe, orient, and dominant products to customers throughout the defense, intelligence and commercial markets. The company was founded in 2020 and is headquartered in McLean, VA. The listed name for BBAI is BigBear.ai Holdings. The CEO is Kevin McAleenan, that's hard to say. I hope I got it right. In 2020, 630 employees out of Virginia. Now, if you'd like Kevin on the show, we have a Meet the CEO series. Kevin indeed can be on the show. How we do it is I never cold call or ring anyone or invite anyone or spam anyone. They all ask to come on the show. They learn about the show through you. They want to hear from you, not an investor, not a broadcaster. They want to hear from you. So what you do is you find the investor relations website on their web, the investor relations email on their website. You email them and tell them that you're an investor and you'd like to learn more and you'd like the world to learn more about their company. As our Meet the CEO series often ranks #1 on YouTube and Google and draws a lot of attention to the stock. And they will talk to you, I'm sure. And at some point, they will want to be on the show. This is how we always do it. And get a relationship with them, then put them in contact with me once you've done that and they've shown interest, and then off we go. And then let me know you've done that as well so I can look out for that email or that message. All right? So that's how we get them on the show. Now then, 79 million is the volume today, and 207 million is the average. A lot of volume here. People are trading in and out. That concerns me. 1.92 market cap, and look at that spread there. 1036 52-week high and 116 the 52-week low. So it's all over the place. Robinhood investors, they're buying and selling a bit of both. I'm not too worried what they're doing. I'm a Robinhood investor. I don't care what I'm doing. I care what the insiders are doing and the institutions. Hedge funds, they've been buying, trimming. The amount they've been trimming there, by the way, is just tax positions. So they're not really getting rid of their positions. That's good. Insiders, what are they doing? They've been selling back in December, but getting less and less recently. So they were selling back in December, but nothing really since then. And the trades recently are the last 3 months anyway, April, May to June. They are very small trades. They'll just be for tax purposes. No big deal, ins and outs. But back in December, there was some big selling going on. Now, what about earnings? The earnings, they're still losing money. They're not making money. Q2, Q3 were okay. Q4 fell off a cliff, started to improve in Q1 of 25. Q2, well, it's on July the 31st. Nobody has requested it yet. If you are a member and you do a super chat of a minimum of $5, in fact, I'll tell you now that this will be $10 because we've got several already on the day. We can do 4 earnings a day, 2 in the morning, 2 in the evening on our main channel and our extra channel. We can cover the earnings for this live. That'll also rank #1 on Google and YouTube. So you might want to book an earnings to accompany this, and it will be in the playlist alongside this analysis. It would be very, very nice to see them beat on earnings. That would be a massive catalyst for this stock. Who else buys the stock in the space? SoundHound. We like SoundHound again, but a very volatile stock. And the people that buy and own these stocks do pump and dump them all the time. Remember, I only own the S&P. I'm not here to pump and dump anything. No one sponsors me, pays me, incentivizes me to give these reviews. I'm just doing them for you. And everything I do here is just to help people. I only own the S&P. You can't accuse me of pumping and dumping anything. Archer Aviation, that's interesting. We cover that one a lot. Palantir, great, but extremely overbought. Super Micro, SoFi, I don't like that one. C3AI, don't know enough about it. Oklo, yes, we've covered that. Rocket Lab is great, but expensive. So a lot of volatile stocks in that list. So let's get now into some more analysis, and then we're going to go into our numbers on the balance sheet. Tap the like button if you like this, and consider subscribing as well if you'd like to support the channel. Okay. Next, we're going to open up, this is a very interesting bit of information. This is updated all the time. This was 2 minutes ago, the latest information on BigBear.ai. 7% it falls today as analyst profit warnings are mixed and mixed sentiment overshadow recent AI contract wins, with small caps under pressure. Profit worries resurface. Analysts are warning about BigBear.ai's ongoing losses and high valuation, according to TipRanks. The company posted a 62 million net loss last quarter and trades at a price to sales ratio of 14.2 times. The average analyst price target is $450, well below today's price. The signals doubts about whether recent contract wins will lead to real profits. That's a concern. What about the options activity? Mixed. Options trading volume is near average with calls leading puts. According to tip ranks, this shows some traders are betting on a rebound, but overall sentiment is not strongly bullish or bearish. The stock's high beta of 3.21 means it tends to move more than the market. Analyst targets diverge. Recent analyst actions are split. H.C. Wainwright raised its price target to $9 and kept a buy rating, but other firms like Northland Securities and AI firm have hold ratings with targets as low as $3.50. The consensus target remains below the current price, adding to investor caution. And finally, broader look, small caps slide. I've always said I don't invest in small caps anyway. Certainly not the Russell 3000. BigBear.ai drop stands out as a Russell 2000, as the Russell 2000 falls over 2% today, underperforming the S&P 500 and NASDAQ. Small cap tech stocks are seeing more volatility, and BigBear.ai's high beta is amplifying the move. Broader market weakness is adding pressure to already cautious sentiment. Okay, that's some great information there. Thank you very much for that. Now then, let's take a deeper dive now, first of all, at the balance sheet. Tap the like button if you like this, and consider subscribing to our channel if you'd like to become a member. If you're watching this later, the links will be below in the description of this video. I'm making this live during a members-only event. Let's now look at the numbers, and you can see straight away it looks very, very expensive. Let me show you the intrinsic valuation. Here we go. $1.56, overvalued by 76%. Worst case scenario, best case scenario 74%, and worst case scenario 79%. So it doesn't make much difference between the worst, base, and best. But we have to say, because of their situation with their profits, this is it's not reliable, as it doesn't use DCF valuation. There are parts of the story missing. So even though that sounds bad, it may be worse, it may be better, but we don't have any profits to go on. So that's the best we can do right now. Scrolling on down, and we look at the financials. The revenue is up 1%. Where's the growth coming from? Not even in estimates we have any growth yet. Operating income is down 18%. Net income is up 21% after these dips, but it's still negative, minus 232 million. Free cash flow is negative, up 16%, but from where it was, but still down. Operating cash flow is down, but up 20% from the last range. And EPS is up 27%, but still negative. Okay, are things going in the right direction? It's hard to tell. The balance sheet, 396 million is the balance sheet. 107 million is in cash. So about 25%, if we look here, will be their cash, 27%. I like cash in a business, but not too much. That's a little bit rich for me. I like to have assets that make money, not just cash sitting around doing very little. I don't like cash. Cash is not for me. I have a very small position in cash in my portfolio. So anyway, 396 million is the assets. Nearly 200 million, nearly half of that is liabilities. How much is debt? Half of that is long-term debt. That's a worry. However, of course, if we look at over here on the pie, long-term debt is 50%. The good news is, as interest rates come down, but we might get to this year, that's what I expect, they're not in a race to come down. Inflation could go up again. We don't know yet with all the tariffs. It's still too early. I don't think so. I think it's transitory, but we shall see. Only time will tell. That could be good, though, if interest rates come down. It could be a major catalyst upward for the company. They're wasting a lot of money servicing their debt. Their gross margin is quite good, 28%, but in this sector, is that good enough to make a profit? No. 145 is the net margin, and it's going down, hence why the earnings has been doing so bad. FCF margin, now if you don't know what these are, using my software, I can hover over and explain what all these are. So if you like the software I'm showing you, this is Alpha Spread. I know the CEO. I've just dropped the link in the chat. It's also below in the description, and I'll post it to the comments as well, and pinned to the top when this video comes out. I know the CEO, and I've managed to get you a deal so good that it basically makes my membership for free. Because that's the deal you get as a member. Really, really good. So it's only a couple of bucks a month and you can have this software that I'm using. It's phenomenal. Everyone should have Alpha Spread. It's only a few bucks and that's the price of my membership. So really cool. ROCE, ROIC, they're all negative. There's nothing to say here about this company at the moment. We've been covering it now for a few years. Profitability is 33%. It brings in some margin, profit, but after net, it doesn't have any profit really. 33. 37%, that's very, very low. Very, very low. It's not red. It's not saying the company's about to go bust, but not good. The stock price, of course, will send it down there as well, but 37% solvency. It's not going to go bust tomorrow, but it's not a good balance sheet. It isn't. Okay. The downside, worst case scenario, 77%. Ouch. What about the average? Well, 38% downside. These are Wall Street's targets. What about the best scenario? 5% down. So people would argue where we are today is too expensive. The shareholders do it to themselves. They pump it, they dump it, they pump it, they dump it. Unfortunately, it's one of those stocks that just gets that sort of attention. You can see that. It's at the top of its range again now, so you know full well it's going to be dumped again. Well, we don't know that, but it would suggest that from here. So you can't really. I don't think this is a buy at this level. I'll show you the inside trading. I can give you that information as well. So let me show you that now. Nothing in the last 2 to 3 months, but in the 3 to 6 months range, we've got Long Amanda and Ricky, Sean Raymond. They've been selling. You can see here who's been selling. Again, this is all in more detail on the software. The link I've just put in the chat, it'll be below in the description and pinned to the comments if you want this software. So not looking good here. We like the sector, but it's hard to turn this into profits. Now, on the software I'm showing you, I am actually one of the recognized analysts alongside Schwab, Yahoo Finance. I'll show you. Look here. Look at this. This is pretty cool, right? Look at that. There I am. 1 year ago, I did a Big Bear analysis. You might want to go and check that out. There you go. There I am, alongside CNBC and Yahoo. There is my post. They've shared that. How cool is that? Pretty cool, I think you agree. All right. So let's carry on and let's go further into the analysis. If you've just tuned in, please tap the like button and consider subscribing. If you haven't done so, I know everybody watching me live has. We're making it during a members-only event. These will be available over the weekend as their own videos. Let me now move into, have a look at the website. Here's the website, just giving you information. It's BigBear.ai. A bit more information. I'll read it from the website. Strengthen operations with powerful technology. Big Bear is at the forefront of innovation of national security and is committed to supporting the critical infrastructure driving our nation's competitive edge. It does sound a little bit like Palantir. Is it the next Palantir? Jim Cramer didn't think so. He said, I prefer to own Palantir, even though it's expensive, extremely expensive, more expensive perhaps than BigBear.ai. Anyway, let's now go into some latest news before we go into our AI model. SoundHound BigBear.ai surge as agentic AI names rally. This was just a couple of days ago. It rallied. SoundHound and Big Bear both jumped during Tuesday. It's just a couple of days ago. Tuesday morning trading as a swath of stocks associated with agentive artificial intelligence climbed. SoundHound surged by 11%. Late morning, we had BigBear.ai had increased 5%. Salesforce, you can see there all the numbers. BigBear.ai has captured more than 100% over the past month and is on track to reach the multi-year high it achieved in mid-February before the stock started to crash once again. Its AI agents are used in defense applications. Its Genius platform can integrate with enterprise systems such as Salesforce and ServiceNow to provide self-service agents. SoundHound has climbed 30% over the past month, but remains down 34% year to date. It reached an all-time high of $23.95 in late December before entering a free fall. Its autonomous conversational voice and chat AI agents are used in retail, restaurants, finance, and automobiles. A bit more information on SoundHound. We don't need that. Let me move on. I'm going to do the AI model in a second, but before I do, we're all familiar with the chart the way it is, but I want to share with you, if you put $10,000 in the S&P and $10,000 in Big Bear just in January 22, so 3 years ago, the blue line is Big Bear. You can see it's very volatile. It pops up and goes down, and now it's coming back up to the S&P. You would have in Big Bear, 10 grand would now owe you $12,000. I'll zoom in to make it clearer. And the S&P 500, 10 grand would have served you 13.6. So you just as well owning the S&P over that period of time. In fact, you'd end up slightly better off. So it's always worth back testing to the S&P. Right. What about the short interest? 27%. It's rallied at a high again, so the shorts are probably going to drive it back down. Don't expect a short squeeze unless there's any imminent announcement. I don't see it. Maybe you know of it. I don't know of anything at the moment. So 27% short interest with upward volume and some good news, a short squeeze. Definitely. And we've got volume and we've got short interest of a high enough amount, 27%, definitely you can get a short squeeze. Absolutely. But there needs to be a catalyst. I would suggest the catalyst would be it's beaten on earnings, and that's next week. If someone books the earnings, we could certainly get a short squeeze if we beat and smash earnings. That could definitely happen. So Seeking Alpha is saying hold, Wall Street is saying hold, and buy, and Quant is saying hold. So no one's selling here, which is interesting, considering it's had a rally recently. What about the valuation? Now it's C+. That's interesting as well. So obviously the stock is growing because the valuation is the same as it was 3 months ago, even when the stock was lower. So obviously the company is growing. We'll come on to that in a moment. Growth, A-. All right. Profitability, C-. Momentum, A+, and revisions, D. Now I'll go into a deeper dive now for our AI model. So if you tap the like button, that will share this out, and consider subscribing as well if you'd like to support our channel. So let me read this. I have got some comments coming in from our members. Let's have a look. I'm seeing a few comments coming in from people. Cedar Tree says gap in the daily chart at $6 for BBAI. 530 would be a good area to add or start a position for BBAI. This is not coming from me. This is coming from one of our members that has been a member of our channel for over a year, coming on to 2 years. So take that as you will. BBAI could find support here at 650. There you go. All right. Now then, let's wrap up this review with my AI analysis. We don't need to read through the company description. You all know what it is. If you want to pause it there, you can. Now then, we talked about Palantir, competitors and unique value. So Big Bear faces a competition from a variety of companies in the AI and defense sectors, including Palantir, which offers mission-driven AI integration for defense. C3 AI, known for enterprise and defense AI applications, and Booz Allen Hamilton, a major federal contractor with strong analytics and autonomous system capabilities. Okay. Big Bear AI's unique value proposition lies in its comprehensive AI solutions that integrate seamlessly into critical national security and infrastructure environments. The company's edge in AI operationalization stems from its long outstanding relationships with government agencies, its focus on developing mission-ready AI technologies, and its strategic alliances that enhance its innovation capabilities. These factors, combined with its robust AI portfolio, provide Big Bear AI a competitive advantage in delivering tailored solutions for complex decision-making scenarios. Now let's look at our numbers. BBAI is rated hold. The company exhibits strong momentum and impressive growth, but is challenged by profitability concerns and a stretched valuation, contributing to a balanced outlook. So first of all, valuation. BBAI faces a challenging valuation scenario. Its price sales ratio of 12.16 is significantly higher than the sector median of 3.21, indicating the stock is considerably overpriced compared to its peers. Such elevated valuation suggests potential overvaluation relative to the sector. Growth. BBAI demonstrates remarkable growth with a capex growth of 1,215%, vastly surpassing the sector's 3%, showing the company's aggressive expansion and investment in its future. Profitability. BBAI struggles with profitability, highlighted by a net income margin of negative 144%, significantly below the sector's 4%. This indicates the company is not efficiently converting sales into profits, posing a challenge to its financial health. So this could just simply be a trading stock, people buying and selling. That's not related to the business, and the profitability isn't there, but people are buying and selling, just pumping something that's trending. It's a bit like Palantir on that case. They are way overbought, and everybody just keeps buying it and then dumping it and buying it and dumping it. It's crazy. Momentum. BBAI's stock momentum is exceptionally robust with a one-year price performance of 444%, far exceeding the sector's 5%. This indicates a strong bullish sentiment and significant investor confidence in the stock. Revisions. Recent trends in earnings estimates are favorable, with 3 downward EPS revisions in the last 3 months, suggesting analysts have a more cautious outlook on BBAI's future earnings. In summary, BBAI's impressive growth and strong momentum are offset by its profitability challenges and high valuation, resulting in a hold rating. While the company shows potential for expansion, its current financial metrics suggest a need for caution. So there you go. Excuse me. There is my analysis review today. I hope you enjoyed that. Click above my head for all the links down below in the description. I'll put all my links with Seeking Alpha and Alpha Spread down there as well, all the software that I use. And over here, I should put my full playlist of all the stocks I reviewed, the Alpha Spread playlist. And down here, I should give you the Big Bear playlist with all the analysis I've done, and maybe the earnings call. If someone requests it, it'll all be in that playlist. And Sensei will do a chart for you if you ask him, and then that will go in the playlist as well. That's it from me. Until next time, as always, take care of yourselves and each other.